Hey there, good morning, everybody. Chris Franks with Texas West Capital. It is just a few minutes after 11 a.m. Central Standard Time here on Friday. You guys made it. It is the 18th of September, 2020, San Antonio, Texas. I think we've got quadruple witching today as well across, the legacy markets there. And of course, next week we'll have, the closing of the monthly contracts and stuff like that. So, you can probably expect some volatility to continue on into next week and whatnot. We've had some this week, again with the Fed minutes and stuff like that. So, coming up with that here in the U.S., coming up with the presidential election here in, I guess just over about a month and a half from now or so. I think it's November 4th. So, and I hate to say it, guys, but whoever wins, it's just going to cause a bunch of, I don't know. Nobody's going to be happy, guys, and everybody's going to be happy. It's kind of funny the way that'll work. Everybody here is so divided. And it's been going on for the last 20 years now, really. It's just coming to a head right now, I think. So we'll see what happens. Probably going to create some kind of volatility in the markets. Volatility is never good for upward progression. I've said it before. If you're a trader, you want the volatility. You don't care what the longer term play is. You're just looking for price to move during the day when you're trading so you can make money, right? But if you're a longer term investor, if you're an investor or something, you want as little volatility as possible. You want price just to continue to kind of trend up. And so that's why usually, when the volatility kicks in, markets kind of drop off. It's not a good situation for them. So we'll see how this all goes, guys. Who's here already? Data, what's going on, man? Sean's here. Good to see you, buddy. Devin Christ checking in. What's going on, man? It's 11 p.m. there. Now we're going to let us be able to figure out which part of the world you're in. Nah, glad to have you here for sure. Hey there, Clarkman. Good to see you. I'm not bearish. Come on, guys. I think I need to start probably posting at least weekly on Twitter there. Everybody, I don't know. I guess I see it as my duty, it seems like these days, to kind of get everybody in a reality check, But unfortunately, when I do, people automatically assume that I'm bearish. Now, I'm not talking about Clarkman here, but I'm just saying in general, and because I do have this potential lower target. The reality, guys, at the end of the day, I don't care if it goes down or up. I just care that it moves. We'll trade either way. But if you ask me my opinion, yeah, I think there's a good case to be made for it to go down lower. That doesn't mean it has to. That doesn't mean that I just assume that's it and that's all there is to it. So I think you guys understand that, which is great. Unfortunately, you have people that don't, pay enough attention, and then they just make assumptions that always make them look silly. So I try to be as understanding as possible, but, I'm only human as well. So sometimes sometimes it just comes out. I get a little frustrated with people, but I try not to. Hey there, Block Tech Management. Good to see you checking in. Evolution coming in here as well. Crypto Girl here. Phoenix, what's going on, man? Good to see you always showing up. Clarkman saying, is the market just a measure of feelings and expectations? Pretty much. That honestly, that's really, that's probably as simple as you can put it. It's just a visual, the charts, they're just a visual representation of the emotional, social mood that's going on around the world. And, people, often say, oh, but the Fed can go in there and prop up and whatever. And, guys, the Fed is all part of that. The Fed is not some outlier that's special, which is why for 10 years they've tried to get inflation up there, and they've done it for less than a third of the time to get it even near the 2% they were looking at. Heck, it was even deflationary in 2015 or 16. In spite of all the QE they put in the last 10 years. So I think the sooner people recognize that, the more profitable they can be in the markets. As long as you continue to hold on to these old ideas that the news is what drives the market and all this other nonsense, I think in general, you make it a lot harder on yourself to make money. Trading news events, guys, yeah, there's volatility, but that's too much volatility in a short period of time. Most often, if you look at, if you traded every news event on an aggregate, most likely you would lose money over the term. You might get lucky here or there, but the odds are most likely you'd lose money over the term. I don't trade news events. I usually stay away from them. I'm interested in being in before a news event happens. And that way you're already in, you can ride it, if you want to. If I'm not in, I don't jump on it because some kind of news hits. That, again, to me, it's too risky. There's no reason to do that. So just my thoughts anyway. Hey there, Mike Kane, what's going on, man? Good to see you checking in. Farm D, what's up, buddy? Long time no see. Spiral Architect, good to see you checking in. Pixafin checking in from Switzerland. Pixafin from Switzerland. Man, I love saying that. Offmain, what's going on, bud? Farm D says finally have some time to make a live one. Well, we're glad to have you here. Clarkman's in Spain today. Interesting. Hope you're having fun there, bud. Zet, what's going on? Luke's here. Let's see here. Clarkman says, even so, how come commodities are so far decoupled from reality? I mean, if you... Again, I don't know that necessarily things are decoupled from reality. I think they're decoupled from the way people view things normally. The market itself, remember, the market itself is a measure of what's going on with the social mood. And, I continue to talk about what's going on worldwide. What's going on in the U.S. for the past year here, guys, with all the protests and all these things and the divisiveness between, Democrats and Republicans. Such nonsense between vegetarians and meat eaters. Are you kidding me? I mean, it's gotten so bad here, guys. And not just here, but in lots of places in the world. And then the pandemic comes in and governments respond probably completely wrong for the most part worldwide with that, which causes more problems for people, causes, businesses to go out of business. It causes people to lose their jobs. Government then has to take up the reins and try to support the populace if they do that. But even when they do, it's never as good as somebody supporting themselves usually, in general. The QE comes in, it widens the wealth gap. We've already talked before how the QE affects asset prices and how that widens that wealth gap. I've talked about how the people that are most hurt by everything that's going on are the middle class. The poor and the rich do a lot better out of all this, believe it or not, than the middle class. The middle class is the one that really gets a reaming with everything that's been going on. And so that just creates a lot of bad emotion, a lot of bad juju throughout the world. And so, I don't think that things are necessarily decoupled from reality. I just think that maybe people are just maybe not really noticing fully what's going on with everything socially, mood-wise. We tend to pay attention to the things that happen in our social circle or our economic position, stuff like that. We don't tend to pay a whole lot of attention to things that happen outside of that or to our particular point of the world. Again, Americans are known quite a bit. I say Americans. We got North and South America. United States citizens. We tend to get a bad name because, many of us believe that we're the center of the world kind of thing. Who cares what's going on in the rest of the world? We're it. And so that adds to it. But even with other countries, though, you still get the same thing, to some extent. So all that just kind of, it keeps you concentrated on you, and you're not really paying attention to what's going on in the bigger world until it really hits, until it really just comes to a head. And then it's like, what the heck just happened? And I think that's probably the way that's really what's going on there more than anything else. But the other thing, of course, is that, as we've talked about it, 2001 was the dot-com bubble. 2008 was the mortgage crisis, right? Great financial crisis there. This thing right now that we're looking at potentially really leaning in that started, that really kind of gave you a headshot there in March, is potentially the top of the credit bubble. And that's the everything bubble, because credit is the basis for a debt-based economy. We've talked about this time and time again. So, to keep from going on all over it again here, basically, if you're in a debt-based economy, which most of the largest countries in the world are, if not all of them, you need credit expansion. You absolutely have to have people spending and producing beyond what's needed. Overconsumption, overproduction, because that creates inflation, which continues to build that bubble. And the minute people stop paying or start paying down their debt rather than gaining more debt, the minute that people or that banks tighten their lending standards so credit can't continue to expand, the minute that people really become worried about the economy and what's going on, and so they start putting money away or stop spending as frivolously, well, that has a negative effect on what's going on there. And so, you get at one point, we've been told to continue to spend beyond our means. You may have heard over the last 20 years or 30 years how people are living paycheck to paycheck. At some point, you get to the point you just go, man, that's enough. I can't do it anymore. I can't take out more debt. Government keeps saying, take out more debt, keep on doing more. And then people just, at some point, there's a level at which you can't do that anymore, or you refuse to do that anymore. And that very well likely is what I'm looking at that we're at right now. And so that kind of makes things that maybe the way you thought that commodities moved with the markets and whatnot, maybe that's why it looks different now than what it's looked like over the last 80 years. As we hit the end of this credit bubble, this larger term cycle, this super cycle that we're potentially finishing up here. Yeah, so that's what we're looking at there. Let me see here. Endorphinus, what's going on? Checking in from India. Glad to have you here. Pablo checking in from Argentina. Man, I love it, man. You guys checking in forever. That's awesome. How likely is it that we are just in a correction or a recession instead of a new 2008? Oh, if we're doing something more than just a simple small correction here, it's going to be a lot worse than 2008. Again, the idea that this is a credit bubble versus just a sector bubble, that's the difference. 2001, tech stocks, sector bubble. 2008, mortgages, sector bubble. 2020 ends up being credit bubble. That's the everything bubble. So that's why I keep, that's why I have those really low targets, when we're looking at the stocks and whatnot, if it plays out to what I think's happening. Because it is the bigger thing. It's this cycle that's been ongoing since right before the Great Depression. So since the Great Depression up here, this has been one large cycle. But, we're looking at this as being the top of that cycle. Kind of getting to that, the Great Depression area was kind of like the top of the previous cycle there. So that's what we're kind of looking at with this. Let me see here. Yeah, I saw that in Endorphinus. I saw that India might present a bill to ban crypto. Let me see. You said you're from India, right? Yeah. So, I know we've been watching the news, last couple of years. India bans crypto. India wants to ban crypto and whatnot. We'll see if it actually happens. But, that wouldn't be a good thing. I mean, India is a very, very large economy there or potential for, huge growth. You've got China's very large and growing there, and then India's right there with them. And so, to cut off that segment of the world from potentially getting involved in cryptocurrencies, while it may not, be like the death knell to cryptocurrencies or anything, it could make it more difficult for Bitcoin to continue to grow. In other words, it would be a lot easier for Bitcoin to rise up there if they have India, available to participate. Yeah. Hey there, Kyle. Good to see you. Happy Friday, my friend. Onyx King, what's going on, buddy? He says, it sounds to me that we need a system reset and come out with a better economic system. This seems so fragile and not resilient at all. Yeah, that's kind of like what we might see here. I'm not convinced yet that we would have a total collapse of the financial system. I think the possibility's there, and, we'd have to start with something new. I don't know. Maybe I'm just not cynical enough yet. I don't know that it happens enough that we actually have a full reset, a new system in place. I think it's possible, but I'm not convinced that would happen yet. But either way, we need to purge the system of the last 90 years of just excessive growth and consumption. That's the idea of what this larger kind of potentially depression-esque type economic condition, would be. Yeah. Is there a possibility that this long-term cycle is dampened by market optimism? There's always the possibility. I mean, there's always the possibility, guys. Just because I have my ideas of where things are at, and looking at Elliott waves and kind of figuring things out there and cycles, and there's more than just Elliott wave for cycles, guys. But if we're looking at all that, I mean, it points to right now being a good possibility, but it doesn't guarantee it. So we have to see, how does this play out. Now, there are a lot of things happening right now. Again, if we look at the market for what it is, and just this visual, or kind of more physical representation of the social mood going on. Well, again, if we look at what I was talking about at the beginning here with the social mood and what's going on, and here in the U.S. specifically, tons of still got people protesting, and it's been going on all year long, and significant. You've still got looting and rioting going on with all that. I mean, it's a lot of weird stuff going on right now. Again, that wealth gap and part of that's due to the wealth gap, which is the result of government. That's the thing, guys. Because of the QE and the way it works, it inflates asset prices. And so those that have it get richer. So the rich get richer. The rest of us don't, right? And so that's kind of all of that added together there. Sure. Hey there, Omar. Good to see you. Candle Shepherds here. Pablo says, in the 90s in Argentina, we had a strong peso paired to the dollar based on increasing debt, lasted like 5 years, and then ended up in hyperinflation, 300% in a couple of months. Yeah, I talked about that the other day. I don't, because of the U.S.'s unique, or the U.S. dollar's unique position in the world, I don't think that we're really at risk for hyperinflation, or at least not anytime soon. Again, U.S. dollar being global reserve currency, more than 50% of the world's debt's denominated in dollars. Oil's denominated in dollars. The U.S. has the most advanced military in the world and boots on the ground in every country that it officially recognizes, 196. And so all these things, and plus, of course, largest producer and exporter of oil, a huge importer. So all this stuff that we do, I think kind of protects the dollar against hyperinflation at the moment. Now, I think if any of that stuff really starts kind of peeling back, or multiples of those things, I think it becomes a higher risk. But for right now, U.S. position, I'm not so worried about hyperinflation. But that is definitely something that much smaller economies do have to, or much smaller countries do have to worry about, because they don't hold those same positions in the world. And that's why we usually see them, like you said there, in the 90s for Argentina. We've seen it over there, and in Africa, and a few countries over there. We even saw it with Germany after the World War there. They went into hyperinflation after that. So yeah, it happens a lot, but usually in countries that aren't as significant, within the whole world structure, and then that's why. So we'll see there. Hey there, Florian. Good to see you, man. Yeah, I'll take a look at the NASDAQ today. Remind me. Let's go ahead and get going here. I just wanted to say real quick, man, this Tier 3 educational stuff that I started a couple of months ago, I mean, it just seems to be such a blast. I had this great comment this morning here from one of our members. He said, just wanted to let you know that I tried and I'm not going to let you know what we taught there this week, but he said he tried it last night for the first time, made 50 plus pips in 5 hours. Best Forex trade all week long. Thanks for the new training. It's worth so much more than you're charging. So it's great stuff when we get comments like that, because that just lets me know that, hey, the things that I'm teaching and the way I'm teaching them are really helpful to traders. Because if they're not, then there's no reason for me to be doing it, right? So we'd love to have you in, guys. Come on, join us over here at howtotradetowin.com. You can get in there. If you just want to check out, if you want to take a free trial of what we do, you can get access to multiple channels through the free trial there on our server. You can just come down here and click on the server icon, on the Discord icon here, or connect or whatever. It'll take you to our server. You'll have a welcome screen, and there'll be a trial info channel when you look at the channels. Just go in there and follow the directions. We've got a bot that sets you up with the trial. I think it's 7 days. So it doesn't give you any specific tier, all the channels in any specific tier, but it does give you a sampling of channels from the different tiers so that you can see the discussion and everything that goes on. So that way you understand that you're not just, paying for something that, oh my God, nobody's there and nobody's talking. And there's no information coming out. So it's a great thing there. We'd love to have you there, guys. I think we do a great thing. We got great people. That's for sure. Let me see here. Yeah, Pablo says it was like 5 years of a strong peso and deflation before the hyperinflation. Yeah. And then that's the way it'll usually work. You'll have the deflationary hit first, and then inflation takes over. And again, that's what we're kind of looking, that's my thesis for what's happening or what's going to happen here in the U.S. I believe we're headed into deflation. We're going to have a deflationary bust, and then we can have, I think we'll have a deflationary bust, and then we'll hit stagflation, and then we'll probably hit inflation. I think it'll happen in that order, just because of the way we're designed and the way we are. I think that's what's going to be. So, deflation means all your assets are going to be worth less. Why? I didn't say worthless, just worth less. Because, if the dollar increases in value, it takes less dollars to buy a thing, right? So anything that's valued, that's denominated in dollars is worth less. So just something to think about, when everybody says, gold can't possibly go down to $1,000 or, silver can't possibly go down to $8 or, they thought, hey, even though there's a little bit more to it than that, they thought oil couldn't go down to negative $40, right? Proved them wrong in May. That was crazy times right there. Went even lower than we thought. We were looking at like, below $8, potentially around $3 or $4. Man, that thing just totally, I don't know anybody, and I know a lot of people in oil, and I don't know anybody that had even a close, thinking it was even going to get negative. Never happened before. So that was a crazy time there. It might not be the lowest it goes. We might have one more dip down still, guys. So I'm still monitoring that right now. I'm not convinced that was the bottom yet. But we're going to watch and see what goes on here. Let me see here. Zet says, I believe my shorts will all be worth more, actually. Hey, Silvio, good to see you checking in. All right, guys. So here's what we're looking at. We'll start with the daily here, all right? So the daily printed a TD9 yesterday. A TD9 in itself is not, as I've told you guys before, with the TD sequential system, a TD9 does not say, price definitely has to reverse. It means it's a pause, okay? Now, you gain some significance with that TD9 when it happens at support or resistance, okay? So see this red line right here that comes off of the TD system? That's letting you know this resistance here. And, again, it's something we've shown you. This is all this support right here. And you decline that support, boom, get up here, get rejected as support, as resistance there. So you really get a TD9 at resistance. So that everything else aside, that increases the odds that this is more likely a reverse than just a pause. But we still have to see it, convert. It still doesn't guarantee it, guys. So we have that. We have this doji here, basically near the highs here. And so what we need to kind of confirm this potential reversal here is we want to see this candle, especially if it's today, close as a nice supply candle here. So what we want to see is we would love to see it close minimally. We'd love to see it close below yesterday's low. So yesterday's low was 10,745 and 83 cents here on Binance. If we could close below that on the daily today, that would go a long way toward suggesting that the top is potentially in for this locally here. And then, of course, we've still got everything else we've got to do as it goes down. But on the daily, if you get a close below the S1 on the daily, you should be looking minimally to target these swing lows down here, but more likely than not hitting this S2 pivot. Again, still looking minimally to get to this demand candle over here, or what ends up being demand here, as I've been talking about since we were way up here, right? Everybody kind of laughed at me up here, but I'm still looking forward to at least get there. That fills in that CME gap at around 9,600. But realistically, probably looking at least at 9,100 and going further. Now, does that happen from right here? There's a couple of possible counts. There's even bullish counts, guys. If we were to continue up through here, up through the pivot, that would give me a lot of reason to think, okay, this might just be like a 4 and we've got a 5 still going up. But as long as we remain below that daily pivot, your bias should be to the downside on the daily time frame. It does not get bullish until you're pushing up through that pivot and closing above it. So, if you look at this, you can get basically a 1, 2, 3, potentially a 4 right here. It just went over 50% retracement of what would be wave 3. So it's still a valid wave 4. A little bit deep, but a valid wave 4. It didn't impede on wave 1 over here either. So it could be a 1, 2, 3, 4, and a 5 still to get down there toward that 9,600 at least, maybe even 9,100. Now, if it does that, that could be then a 1 or an A. If it's a 1, then you've got a 2, 3, 4, 5 to finish an A, and then an ABC up, and then 5 more down for C. If it's an A, you still have ABC up or a triangle here for B, and then you'll have 5 more legs down for C. So in that case, you'd still be looking for price to pull back towards 7,000, more likely than not. I think, there's still that other count that somebody had shared again that I've talked about a few times. Basically where they're looking at this being A, this being B, and then this being C here. So this would be a 4, and you have a 5 coming down here. And that would be an expanded flat for a wave 4 here, and then a move up. So there's still no guarantees about what's going on here yet, guys. Just because I have my longer term views doesn't mean you just blindly go, oh yeah, okay, it is or it isn't. I'm watching this. I'm every day, multiple times a day with Discord, we're detailing what's going on here, and what it would take to be more bullish than bearish, or what would result in a more bearish than bullish outlook. But the reality of it is, on the daily, guys, we are just going sideways. So this is kind of what we're looking at the moment here. You can notice yesterday when we hit that TD9 there, Stochc RSI closed up there at 99.46. So just below, topped out at 100. We're threatening to cross bearishly here now. RSI is neutral here at about 50, 51, but it's in a downtrend. Lower highs, lower lows still. So this is just a small counter trend rally right now because it still remains below the, again, high, low, lower high, lower low, lower high, lower low, lower high right now still. Now that could change, but right now we're still in this structural downtrend here on RSI. So that's kind of how we're looking this daily here right now. If you want to zoom into a smaller time frame, here's what we're looking at here. Let me see here. Oops. Okay. So we got a few things on. Let me go ahead and turn off the TD sequential because it's a lot of extra stuff on there. Oh, there we go. We'll do this right here. Still, you know what? Let me put back on the 1 hour because it's got that other thing there. Okay, there we go. Let's do this. Let me get rid of some of this extra stuff right here. All right. So if we're looking at this now, I'm not a big fan of head and shoulders. You guys know that. I mentioned it here because it's possible. I'm not a fan that it's such a steep neckline. I don't like really deep or really steep necklines with head and shoulders because often it kind of says, well, it doesn't work out. But for right now, I can still see this as a head and shoulders. If it is, a decline through this support right here, this neckline, should provide a target of about $392 below the point of breakdown. So wherever it breaks down, about $392 below that based on the height here of this. Now, that's important because it gets you below this swing low, which kind of cements this in as a top here. And even more importantly, it gets you below this ascending support that I've had on here for a while. And this is a significant area to get below. Now, if we look at this in terms of, okay, let's say this is finished up here, and this is a 1, and this is a 2. Well, 3, typically, we'd expect to get down here at the 1618, about 10,480 or so. And then 4 back up here at around 10,680, and then 5 down here right at the top of this supply or the demand structure here at the top of this HVN at about 10,360. But if we're coming down through here, this was a strong, solid move up, so I would expect a pretty strong move back down through it. So I could see potentially, if this is a 1, 2, and a 3 here, I could see 3 overextending and hitting the top of this range here, where 5 is supposed to be. And if we see that, then we would get basically 3 down here, bouncing, first one bouncing here off this fresh demand here. 4 goes up, rechecks this support as resistance. 5 drops down, hits the EQ. Now that'll give you a wave 1 down. And so then you would look for an ABC up. And in doing that, that ABC up would likely get up here around 10,800. But, you know, it might take just long enough here that it remains below this descending resistance. I'm sorry, this ascending support that's acting as resistance here. And so if this is significant, this is what you want. You want a recheck of it as resistance and then continuation down. You don't want to see a break back above it and continue up. If it does that, I wouldn't look at this as significant support then, if that were to happen. If we get the drop down something like this, where we're getting rejected at it and continuing down, that to me says that's definitely a significant area, and we should be looking for more significant downside at that point. So that's kind of where we're looking at. I mean, really, that's the long and short of it, guys. Only other thing is, if we go like from here and we're pushing up above this swing high, my initial target is this box up here at 11,160 to 11,210 or so. Secondary target, as I've talked about before, is this 11,300 to 11,310 area. So if it breaks up above that swing high here, those are my targets. If it breaks down below this swing low, you know, just as I explained it, that's what we're kind of looking at. Now, we're looking at ascending supports, but realistically, what you need to do is you need to get below this swing low right here, which is 10,745 and 83 cents. And then you need to get down below this swing low over here, which is 10,606 and 48 cents. Even though we're looking at diagonals and patterns and whatever, at the end of the day, you need to get below those 2 swing lows to kind of set up the move to get down here and further. So that's really kind of where you're looking at. And I mean, so that's pretty much it, guys. That's where we're at with that at the moment here. Obviously, if we get a move up above this swing high over here, $11,093 there, that'll invalidate the idea of a head and shoulders here. So good riddance. You know, here on the 1 hour, we're just barely dipping into oversold here with Stochh RSI. Have a ton of room to go here with RSI. So, you know, I could definitely see that decline coming in. It wouldn't be surprising or anything based on what we have going on here. We have fallen out of the ascending channel here. Again, should kind of indicate that this top may be in locally here, this 3-wave here. By the way, if you're looking at corrections, ABC corrections, they often stay within a channel. So, you know, the fact that it's dropping out of that channel suggests that this is just a 3-wave correction and we've got further downside, if we look at it that way as well. Let me check out with you guys here again. Let me see here. Let me catch up with you guys. Casper, what's going on, buddy? Good to see you checking in. You're late. It's all right, man. Better late than never. Glad to have you here. Let me see here. Casper says, just curious in general, if wave 4 retraces that deep, doesn't that suggest quite a large drop for wave 5? Usually if you get a deep wave 4, it's usually going to be a more shallow wave 5. Wave 5s have a lot more to do with wave 3 length than anything else. You know, that's really what it has most to do with. But if you're getting a deep retracement on a wave 4, usually that's a response to, most times, not really this time, the wave 2 was okay this time, but most of the time, a deep wave 4 is going to be a response to a shallow wave 2. But then, you know, because you have that strong pullback, usually, you know, it's going a lot further before it gets beyond wave 3 as that wave 5. So a lot more of wave 5 is usually completed within wave 3 before it even breaks down below it. So yeah. Hey there, Hank. Good to see you. Let me see here. Let me see here. Anyway, so yeah, so that's, I mean, at the end of the day, guys, that's really all we're looking at. I know you probably want something more significant, but really that's it, guys. It's as simple as that at the moment, I think. You know, I tend to, you know, I do these things because we have our members that trade a lot of different time frames, and so I try to give ideas on shorter time frames. But always remember, it doesn't matter how long you've been in the market, guys. The shorter the time frame, the more likely you are going to be correct. Or, I mean, that you're going to be wrong, that you're going to be incorrect. because you have so much noise, so much of the price going sideways, moving up and down over itself, and that creates different possibilities of what could be going on. But for me, generally, the way I trade is I look at the larger time frames, I look at the ranges, and I'm interested on breakdowns or breakouts of ranges based on what's going on within the range. So I'm really big, and that comes a lot from my Wackofian trading, which is all about ranges. And so, if I look at things, I'm always looking where are the swing highs and lows and where does it make sense and where's the EQ of the range and kind of judging what's going on with volume and price action within that area visually. But I do attempt to try to give shorter term ideas of things, and sometimes we're right, sometimes we're wrong. But I usually try to give if it's going this way, then we're looking at these targets. If it's going down this way. So even then, I try to get a smaller range idea because it tends to be a lot more effective than anything else. Now, if I can find a confluence of things, Elliott Wave with Wyckoff, with supply and demand structures, with pivots, with HVNs on, there with indicated, whatever, that's great. But sometimes, a lot of times it doesn't happen. You don't get a lot of that confluence. So it's always better, guys, to look at the larger time frames when you're trading. I think I may have said that a time or two in the last 3 years. Let me see here. So that's kind of what we're looking at here, guys. If price does happen to continue up into this area here, I'm going to be if it happens to get up into this area here, and then it rejects and happens back down, I'll look at this more as a 1-2. If it rejects right here and continues down, I'm even though I've got this set as a 1 and we're working on a 2 here, I'm liable to look more toward this being a 1, 2, 3, 4 here, and then 5 still down. So, I'm still on the fence about which one it may be because, again, this is just hitting this. It's just right above that 50% retracement of this right here. You can count a 2. You can count 5 waves down here. You can count 4 waves down. 3 waves down here and then 4 up here and 5 still as well. So that's why it's, to me, the wave count isn't so important right in this area right now. It's more along these areas that I talked about. If we're dropping below, then we're looking lower to those other areas. If we're moving above, then we're looking higher to those other areas. And by the way, if we get above this kind of range up here, these are my initial targets. I would definitely probably, especially if this is a 1 and a 2 or an A and a B, I'm definitely looking up here at the 70.5 at 11,688 or so, and potentially 78.6 up here at 11,902. That's kind of where I would really be looking for a wave 2 or a wave C to kind of get to. That's where the big areas, the high volume node are. You guys know me; I'm a huge fan of the 70.5. Guys, add those. If you're using fibs and you don't have 70.5 on there, put it on there right now, and just view and watch and see how well that works for you. I've also got the 65, which I'm a fan of as well. So 61.8's always been the default. This is the golden ratio and everything. But with the advent of algos and whatever trading, we tend to see a lot more hitting that 65 and especially that 70.5. 70.5 is real important to institutional traders. So you'll see a lot more of price returning to those areas. So there's your tip, guys. Baker, what's going on, bud? Appreciate you checking in. Better late than never for sure. I showed him your comment from earlier. I hope you don't mind that I shared it with everybody on Twitter and everything, man. I was really excited with that profit that you got there with Forex using that training this week that we went through. So I couldn't wait to share it. So what is a PTS? I don't know. What are you? I'm sorry. I'm not sure what you're. In what reference you're speaking about a PTS? Did you? I don't know if maybe I was talking too fast. I tend to get excitable and speak fast, so maybe something I said might have sounded like PTS, or if you're referring to something else. Post-traumatic stress, PTSD, post-traumatic stress disorder. Sure. Oh, you heard me say pips, yes. So in Forex, so in Crypto, the smallest unit of measurement, is a sat, right? And so you're talking about moving in sats, right? 100 sats, 1,000 sats, whatever. In Forex, you're talking about pips. Pips are just the unit of measurement. And that's all you're talking about. So if you move up 50 pips, it's significantly more in relationally than 50 sats, but it's the same idea. It's just your unit of measurement for Forex. Yeah. So that's all it is. By the way, guys, I'm going to work on a primer. I've got a lot more of y'all interested in checking out Forex. You haven't ever traded Forex before. I'm actually working on a primer that I'm going to put together for our members there, kind of explaining the basics of Forex and whatnot for you. So that way, in case it's something that you are thinking about, you can get all that heads up and kind of get your answers to questions like that. What is a pip? If you're not in Forex, you don't know what the heck a pip is. You're like, what the heck is that nonsense? So yeah. Again, just one of those things we're going to be adding here pretty quick for you guys. So this is Bitcoin here. Other ways to look at it here. This is the Phoenix chart. Again, you've got the decline through the ascending support of the channel here. You've got the decline through the 15-minute pivot and the close below. You're below the high volume node here. I would be looking for a move down at least to the S1. And even if you don't have the pivots, if we're declining, I'm looking for a test of the swing lows. Notice those swing lows are at that S1 pivot. So you're looking for a decline toward that area at least. And once through that, of course, you're looking at that R1 pivot here. So just a quick, easy way to kind of look at it with that. Another way to look at it here is it really is ultimately this kind of thing right here, right now. This is Binance again, the 1-hour chart. We're about to drop through through this kind of support area here. It's a little bit different than the other one I have. I think the other one I have is the neckline for the head and shoulders. So it looks kind of like this, slightly different. This one right here is coming off the swing low here and then off that next low over there. So just looking for a breakdown. Right now we're trying to get a bounce off it, but I'm expecting to see it just kind of tank on through that. You always get this initial, almost always, you get this initial bounce. And then it follows through to the downside. So we'll see if we get that here. Let me see here. DXY. What's going on with the DXY? DXY is just being a pain in the rear end. It's a lot of sideways, guys. Provides multiple potential counts on it, ideas of what's going on. Nothing's happened that actually makes it distinctly bearish at this time. That could happen if it continues lower, and gets through some key areas. But for right now, it's still considered bullish because it hasn't broken through those key levels. Let me see here. What's going on, Jose? Kyle, you like that idea, man? All right, good. The video idea? Yeah, I'm going to get that up there for you guys. Matter of fact, I'll probably see if I can go ahead and finish recording it this weekend. And that way you guys can have it, at the end of the weekend, beginning of the week already. Get on there. Jose says watching the S&P at the moment. That's always fun times, right? Let's see here. Data says, I honestly don't know if I start buying oil if at some point they're really delivering a barrel to my home. Okay, so I know Data's just being tongue-in-cheek there, but just so you guys know, there's a lot of things people don't know about oil. And I enlightened our members when we had the contracts there, the WTI contracts dropping below zero, and everybody's wanting to to buy and sell and all this stuff. Here's the way it works, guys. WTI is West Texas Intermediate. If you've got oil in the U.S., U.S. oil is based on those contracts, okay? Oil in the U.S. is sent through pipelines. The major hub is in Cushing, Oklahoma. That's where the major storage is there, okay? And so the idea is, by the way, so if you buy a contract, if you hold a contract for WTI for oil, and the contract expires and you have it, you absolutely must take delivery of the oil. Now, they're not just going to deliver it to you. You actually have to, figure out all the logistics to get it delivered or to get it stored, okay? So that, with WTI, West Texas Intermediate, whoever's holding that contract at the time of expiry has to take delivery of oil. That's why it tanked so bad in May. Because with everything going on in the pandemic, those who usually buy the contracts there in May for further on in the year, the airlines and whatnot, they already had oil. And then the pandemic meant they weren't using it. They didn't need to. So all of a sudden people were stuck with oil. So it got to the point where you got down to about -40. So the holders of that oil there were basically paying people to take their oil. So if at that time, like some people did, they actually took possession of that oil, and they've got it sitting on tankers out in the sea right now, because they figured, listen, somebody's paying me $40 a barrel to get it. I'm going to go ahead and take that. It's going to cost me some money to get it, stuck out on the, to lease a tanker and to put the oil on there or whatever and keep it out there for a few months. But the idea is they're going to hold it out there for about a year or so. And then they expect that oil demand will be back up and they'll be able to sell, and obviously it's significant profit, more than covers the cost of what they're doing with the holding. Now, if you're looking at Brent C crude, that is what Europe and everybody else is doing over there. That's the oil that's pulled out over there. And so that oil actually, whereas WTI contracts, oil here in the U.S., goes through the pipelines, and is stored in the facilities and whatnot. Brent C is actually most often stored on tankers that sit out at sea because it's pulled out of the sea, basically, most of it. Their contracts don't require delivery of oil. So those are the differences with the two contracts, guys. If you're holding a WTI contract at the expiry, you are required to take possession of the oil. If you're holding a Brent crude contract, you can either take possession or you can do cash with it, or whatever fiat. So those are the real quick, just kind of overview of the two differences between the contracts there and what they are. A lot of people were trying to buy WTI contracts and had no idea that when you do, you need to take possession of it. And the problem with what happened in May was that global storage was something like 80% full globally. Cushing was completely full. You couldn't call Cushing and say, hey, listen, I've got so many barrels of oil coming at you. Can I rent some space there, lease some space? No, they had nothing. It was all spoken for. And that was the big crux and all that. That's why nobody wanted to take delivery. You couldn't really store it anywhere. And that's what caused that huge decline below $30 to $40 there, below zero. So just a quick thing there, guys. Do I think any of the oil tanker stocks might be a good play? They definitely, I believe they were. I had mentioned a few of them back at that time in Discord. I haven't checked on them recently, but if you have a supply glut, which is what we've had, and a lack of demand, yeah, if you're a tanker, you're probably going to get a lot more demand as people try and going to have to lease you out because they can't get the oil stored anywhere else. So yeah, there should be potentially some good stuff coming out. It depends on how the economy gets going and whatnot, if demand kicks back up. I don't think we're really going to have a huge demand kick anytime, this year. I think maybe sometime late next year if we're lucky. But if this whole, economic downturn continues to pump on and get some real legs on it, I think oil's screwed for a few years. And part of that is the U.S. fault. The U.S. was, we became the world's largest oil producer because of fracking. And fracking's not cheap. It's expensive. But anyway, all the borrowing and everything was cheap money, made it easy to frack, pulled it all up out of the ground, sent the glut throughout the world. And then you had, of course, the Saudis don't want to be, they don't want the U.S. to, of course, to kind of control the oil thing. So they did their thing. And then the Saudis and Russia there right around May started having their issues. And they were both, supplying more to the market as well. All this kind of nonsense just contributed to that big situation in May. And so, we kind of get to where we are now. And so the oil market is really kind of flushing out a lot of the excessive speculation and whatnot, which is on a broader scale what we're talking about with this whole possible credit bubble and deflationary bust and all that. It would be a flushing out of all the speculation over the last, or not all of it, but a significant bit of it that's happened over the last 90 years. And then that's why it would be much worse than what happened in 2008, for instance. I mean, just think, what if the warning shot is the February-March drop? That's to get your attention, and you ignore it. And you keep buying on your Davy Day Trader. Stocks only go up. I'm going to pick numbers out of a Scrabble basket, and I'm going to be so rich. By the way, we haven't heard much from him lately. I wonder how he's doing. Somebody contact him. Make sure he's doing all right. But no, seriously. What if that's your warning shot and you're ignoring it? And that right there was worse in a much quicker time than what all of 2008 was. What if that's just the beginning? That's where people are not thinking. That's where I'm thinking. And you know what? Our best case scenario is that I'm wrong. Everything's fine, or as fine as it can be, and things continue to go up. In which case, you make money. But if I'm right, and you're not prepared, you're going to lose a lot of money. And that's the thing. And most people can't seem to get that through their head because they're so emotionally tied to easy money. They want stocks to go up. They want gold to go up. They want silver to go up. They want Bitcoin to go up. It's great if they do. We can make money. That's fantastic. But you absolutely have to be aware of what's going on around you in the world. What's going on with the financial markets and economics. And economics is not easy. It's called the dismal science for a reason. Most people hate it because it's hard to understand. A lot of that's due to econometrics, which is a bunch of nonsense. But anyway, remember, economics really, guys, at the end of the day, economics really just is the actual buying and selling, the coming together, right? I sell to you, you buy from me, that moment of transaction. That's what it's about. Government and everything has pushed, this math-based economics called econometrics, so that they can produce statistics and numbers that they can then manipulate and use to push agendas. And that's where we're kind of, and I think that's a lot of problem that people have with economics, because that's where it's kind of going. You take any graduate economics program, and you'll have to take econometrics of varying degrees. And so, yeah. Let me see here. Let me see here. It's not just Trump, Hank. It's Trump. It was Obama. It was Bush. It was Clinton. I mean, guys, really, it's been this divisiveness here in the U.S. is nothing just Trump. And no, I'm not a fan of Trump. No, I'm not a fan of Obama either. I'm just not a fan of politics in general, or politicians, guys. Because here's the thing: politics is nothing more than the accumulation and use of power. That's what it is. So anybody that's in politics is intent on using that power. I don't care what reason they give you. Everybody, we can all have reasons that the things we think are the best for everybody. But the minute we start forcing them on everybody, that means we're going to hurt a certain subgroup of people. I'm not cool with that. Because most of what we believe is wrong anyway. So we're going to hurt people just so we can use power because we think we're special. But anyway, that divisiveness has been growing. But it's not just because of them, guys. It's because of government in general. Again, it's this government and what's going on. I talked about how QE itself inflates asset prices, which contributes significantly to the wealth gap growth, right? I mean, it's all that. It's all that in there. But this is nothing that's happening now, is nothing that hasn't happened in cycles through social, historically, socially. We're just going through the end of the cycle again, guys. And then it'll start all over again, and we'll go through everything we went through for the last, 100 years or whatever again. It just is what it is, guys. Life, things, living things, everything runs in cycles. But anyway, what if DeFi is going to cause a bigger correction that the ICO bubble did? If I read the insanity on crypto Twitter, I start to wonder if this market is not just for idiots, Hank says. But it is, I chuckle a little bit at what Hank said there. But guys, really, it's nothing I haven't said before. The euphoria and the easy money in DeFi right now does not scream bottom of a market. Easy money is not made like that at market bottoms. Market bottoms are when everybody forgets about what's going on. Market tops are when everybody all of a sudden knows and everybody's frenzied. And your cab or your Uber driver starts giving you stock tips, or your grocery bag. I don't know, do they still have them in some of these grocery stores? That kid that comes and bags your groceries, he starts giving you stock tips. These things happen at the tops of cycles, guys, not at the bottom. Generally. So it keeps me cautious about further upside for Bitcoin. Not that I'm bearish on Bitcoin, not that I want Bitcoin to fail or anything like that. I want the opposite. But I'm trying to be realistic about what's going on, so that way I'm better prepared to take advantage of what may be happening. That's all. Let me see here. But anyway, just some thoughts on that. So, here we go with the DXY. What's going on with the DXY? Some possibilities here. Now, these are deep retraces, but we haven't actually broken through this low here. So it's possible this is a 1, 2, 1, and then expanded flat here. So A, A, B, C is an A, B, C is a B, 1, 2, 3, 4, 5 maybe as a C here. As long as we stay above this swing low here, it's quite possible 1, 2, 1, 2 come up, okay? There's the possibility, especially if we get really close to this or drop down, or even right now, that this is ABC as an A, B, C as a B, and we're getting 5 down here. So wave 2 is actually still finishing out over here. That's the other possibility. If you're bullish, I think those are probably the two possibilities right now that you watch. So even if it declines below this swing low here, it doesn't necessarily make it bearish. And so that's kind of where we're watching at the moment here. So we'll see what happens as it continues playing out. What's going on there? We want to break out of this range here. If we're going to have a breakdown, we want it to be temporarily. We want to see it bought up and head back up and exit off the top here, and then that should give us a nice strong move up. So that's what we're kind of looking at now. If we can get this bounce off this area here, we should be looking around 94 for our target. Now, if we go ahead and look at this as a point and figure chart, based on this point and figure chart, if we continue up from where we're at here and continue up through this, up through 93.75, so if we print a block there at 94, that should give us a target up here of 98, based on this point and figure. You can see how accurate it's been so far. This move down here gave you this right here. I didn't go do the rest of this. But this right here gave us this target right here. This right here gave us this target right here. So again, if we get this continued move up and break out of here, that should give us a 98 target on that. And so with this here, 98, where is that going to take you? It's going to take you way up here. So a bit higher than this 1, 2 here. But if this is a 1, 2 and then this is a 1, 2, this interior wave count could stretch this larger wave count and get you from, instead of the 96, 60 kind of area, could get you up there to 98. But that has to break out above 94 here, this green line. You got to get a close above that first. Let me see here. Let me see here. Kyle says, I got rid of social media outside of Telegram, Snapchat, and Discord. Yeah, social media is such a drain on your general well-being, guys. There's a lot of psychology studies that have been done, psychological studies that have been done that mention that. Let me see here. Kyle says, I hope we could learn something from the last 100 years and make this next 100 better, but I can dream. The funny thing about history is it tends to, if not repeat exactly, it does tend to rhyme quite a bit. It's always, that's why, the things we teach and the things we talk about when it comes to trading, guys, everybody's like, oh, but if you're teaching everybody this, then everybody's going to know and it's not going to work anymore, right? No, you get the same people that are entering the market today that entered in 2000, that entered in 1975, that entered in 1930. It's always the same people that come in. It's always that same mindset. So, you can tell all the people you want about it. You're always going to have that same thing happening over and over and over again. So there's no real worry about that. So I'm saying if you get this right, that if the DXY goes up, then Bitcoin goes down. They go opposite. That's the way it should go initially, especially if DXY continues up through that 94, 96 area and whatnot. That leads to that deflationary bust, and in a deflationary bust, you're going to have all assets, gold, silver, Bitcoin, stock market, are initially going to go down. The deflationary bust is going to be a liquidity issue. Things are going to happen. There's already talks of there being liquidity issues with the U.S. dollar over in, I can't remember what that article was the other day. I think it was in Africa somewhere. The central bank having issue getting dollars. And this is something we've talked about for the last few years. When there's a deflation, a dollar deflation, and you get this dollar liquidity crisis, the economies that are going to be hurt worst. We often talk about us individually, but really it's the emerging economies, these little countries that have borrowed all this money that they need dollars to pay, and then they can't get the dollars to pay them, and then they have to default. And you default, it leads to all this bad stuff, So the emerging economies are going to get hit with that pretty well. So yeah. Let me see here. If you're using moving averages, you're probably behind times. Again, research shows, research over the last 10, 15 years shows that moving averages are right about 50% of the time. They used to be more correct. They used to be a good thing to use back like in the 60s before we had all this automated trading and algos. But now that we have the high frequency trading and all that, assets are held for shorter periods of time, which affects the validity of the moving average as a trading tool. Now, people are going to argue with me. I'm sure. I'm not going to argue with you. I'm just telling you what research says, guys. You don't have to believe it. Yeah, you can do whatever you're going to do. But it's one reason why I tend to stay away from moving averages. Most people when they're using moving averages, they tend to remember them like they remember news events. News events happen all the time. Price action happens all the time. Only sometimes do we go, oh, well, that caused that. And then we go, oh, it must cause it all the time, right? Same thing with moving averages. We ignore all the times it didn't work, and then we say, oh, but over here and here it worked. So it works all the time. Same idea, guys. Yeah. Okay, Usman, whatever, man. You think Elliott Wave is worse? That's your opinion. That's fine. Elliott Wave is about understanding how to use it. And most people don't online. So that's probably your position on that. I get that. I get it. Let me see here. So what else we got here? So let's jump over here some of these markets that we kind of look at. Let me see here. Somebody wanted to look at the NASDAQ, so I'll go ahead and show you NASDAQ first here. Let's see here. Let's see. Pull this up over here. Oh, yeah, look at that. Nice continued decline there on the NASDAQ. Yeah, I mean, nothing I haven't told, we've been talking about this in Discord. We do these updates a couple of times a day. You lost channel support here, retested and rejected a channel support. Then you lost the S1 on the daily here. Now you lost your swing low. You should be looking minimally at S2. This is building a strong case for this being the top of the NASDAQ here. So S2 minimum target next. What you really want to see is a decline through this wave 4 swing low here. This 103.13 and 94 cents, which again is right there below that that S2 there. You don't have to close below it. You just need to dip below it. If you do that, that then confirms this is a done wave here. And if you want to continue looking, how do you look at it on the way down here? Gosh, all this stuff's moved around. God, dog it. I hate it when this happens with TradingView here on these charts. But anyway, God, look at that. It's all moved over. That's crazy. Just because you switch out with different time frames. Anyway, so after that wave 4, you're looking at this wave 4 swing here. And that's really the next target you want to see to confirm further downside. And so, if you're doing that, you're really probably looking at your next move down here. More likely than not. But right now, good strong drop there, as expected. Right out of the range there. Next target's right there. So, no real surprise there. Hey there, Alexander. Perfect timing. You came in to ask about the NASDAQ. That's what I think. So, yeah. Oh, yeah, I don't usually set the time frames on the Elliott. Well, I do sometimes. I don't think I did it on here. Oh, yeah, I would just have to set it to the daily. I guess I could just set it to the daily. Yeah, that's not a big deal. Do that right there. I put it on 360, so whatever. All right. So that's what we've got there with that. Let's take a look here at what's going on with the E-minis here, which is your S&P, what everybody loves to trade for the S&P. Let's take a look at that. Oh, yeah. Yeah, of course, declined with that. Expected, usual. Do I have this locked here? What's going on here? First of all, it's not on log. All right. Anyway, yeah. So again, I've got it as a 1 with a potential flat kind of correction here, and then like a 1, probably like a 1-2 on that or whatever. If this count's correct, we're looking at 3 down here at around 31.40 or so. What I'm really looking for is this swing low here. Again, same idea. You want to get below that swing low to kind of confirm what's happened above it as being done. Oh, sorry about that, man. Allergies. So really kind of looking for... I've got that locked. Why is that locked? Anyway. So yeah, so I'm looking for continued decline. Looking for it to drop on down below this swing low here to kind of confirm that top in there. What we can notice on the 4 hours, OBV continues to drop off even as price has gone sideways. Potentially a little bit higher here, with highs and lows. But OBV continues to drop off significantly, which again just tells you that the smart money is selling into retail. That's what you get from that there. So again, looking for it to head lower. Dow Jones didn't do too bad. So the Dow Jones transports were doing well through this week a bit. But the Dow Jones itself here, it's laying pretty heavily on its channel support here, looking for a breakdown of that. Again, rejected at the pivot. If it drops through that, we've already dipped through that wave 4 there, which says it should be coming down anyway. But I'm looking get some good confirmation on a drop down through this support here. You can look at your S1 as immediate target, but I really think overall we're headed down to check this wave 4 termination point here. And if we can dip just below that, that'll confirm this top is being in and heading lower as well. So again, things not looking too rosy for the Dow Jones at the moment either. And this move off here is off this large bearish divergence, multi-month bearish divergence here. Coming off that. Let me see here. Oh. Hey, Kyle, have a great day, buddy. Have a great weekend, man. Let me see here. What's no longer an inverse to the DXY, and who's worrying? I don't know who you're talking to, Hank. Let me see here. Oil. What's going on with oil? Let's see here. Oil doing oil things. Hit the 70.5 retracement. I believe that's a 1 and a 2. Looking for a decline below this wave 4 here at about 39.42 to kind of confirm that top's in there. That's exactly what we're looking for. Here on the 1 hour, bearish divergence at the top there leading to the drop. We got a bounce, but looking for it to continue lower off that. A lot of room to fall with the RSI. Stoke RSI has bounced up out of oversold, but easily could drop back in. Still has room there. And again, this is only the 1 hour. So overall, looking for this move down. Once we break down through here, that whether you look at it as an A, B, a C, or a 1, 2, 3, you're looking at well below $30 there, probably below $25 with oil at least. Again, I'm not convinced this is a 1 and then we're on a 2 here. My original count had that decline in May as a 3, and this is a 4, and then we have one more down for a 5. So I'm still, I'm watching this as it goes down. Playing it either way, you're going to at least get 3 waves down. So whether you think this is a 1 and working on a 2, or you think this is a 4 and you're working on a 5, you're still playing it the same way to begin with. And then we kind of see how does it do as it gets toward the end of that third wave, what's going on with that. Start getting a better idea of what may be going on with the oil there. Is it impossible, or is it possible that oil makes a run up still from here? I don't think it's likely. Anything's possible. Anything's possible, guys. I don't think it's likely at the moment. Oil's still having oil issues. There's still a lack of demand. There's still too much supply and too much production. There's no real reason for it to continue to advance significantly. Remember, this move up here to this, what is this here? $44 almost. Remember, that move is off a $40 low. That's like an $80-somewhat move, guys. So, I mean, that's significant movement from that low in May. And this is the first pullback we're really getting from that. So, my bias continues to be to the downside for it right now. Let me see here. You're still holding short from 40? I think you'll be all right. I think you'll be all right. Again, for me, it looks pretty clear to be a 1, 2. So I'm looking for further down. But you definitely want to see it breaking down below that swing low right there to kind of signal, hey, it's probably the top's probably done here and we're heading lower. Again, the retracement hit the 70.5. That's my area, man. I love that. That's a solid wave too. And so it makes a lot of sense. It did it in 3 waves. And then you get a 1, 2, 3, 4, 5 off a C wave there. So yeah, I think it's probably fine. We just need to see some confirmation. Initially, you want to see a drop down below this swing low from this morning. That'll be your first clue. And then you want to get below that swing low. And then you want to get below this swing low. And then this swing low. And once you're getting below this one, you should be really feeling good about lower lows coming in on that. Let me see here. Let me see here. Hank, you were talking about the stock market. Am I worrying about that? No, I don't know why I would. I don't look at direct correlation, guys. The only direct correlation, the only real direct correlation I look at, if you want to have one, is the Euro USD inverse to the DXY. Anything else, guys, gold, silver, your precious metals, oil, stock market, whatnot, they're going to move, but that doesn't mean they're going to move exactly when the DXY moves. And I think that's where a lot of new traders, have a lot of issue because they expect correlations to happen immediately. And all you're looking for is strength in the dollar leads to, weakness in the stock market. Just because they're both going down, for the same couple of hours, it doesn't mean anything. That's not what you're looking. You're looking bigger term picture. What's going on overall? Because your assets move, in their own time frame, relative to whatever. It takes some assets more time to respond to what's going on with the DXY than others. So yeah. That's what I think there. Hey, good luck there, Clarkman. You been holding during the weekend? Yeah. Well, I mean, again, I don't think you're going to have an issue. I can't promise you that it won't go up and over there, but I mean, it seems like we're pretty well done on all that. So we'll see what happens. Let me see here. How do I look at correlation in the FX, Mike? All I was talking about was if you go to your DXY, I think it's what you're talking about here. and you bring up, you can go over and hit this compare add a symbol right here. Let me see if it, there we go. And you just type in Euro USD here, and it'll bring up that Euro USD chart. And you see how it works exactly opposite, pretty much, the DXY. And it does that because the euro makes up about 58% of the basket of 6 or 8 currencies that the USD is compared against to get the DXY. So the euro is the most significant portion, and by a long shot, of all those other ones that it's compared against in that basket. And that's why you get such a strong inverse correlation between the Euro USD and the DXY. So yeah. I don't really look at mathematical correlations. I'm more interested, you go here, you can do this, or you can overlay your Aussie dollar, your Aussie against the USD, or your yen, your USD yen pair against the DXY, and kind of that's what I do. What we noticed is, everything, USD CAD popped, Euro USD dropped, Cable USD dropped, Aussie, the Aussie dollar against the USD, I think I just said, but anyway, they dropped. They were a little bit lagging though. All this happened when the DXY popped. So you can look at things like that. Now, you can look at emerging economies like Mexico, and you can kind of look at it like the USD against the Mexican peso appears to be finishing a wave 1. So it should get a bounce with that there. And so usually, you're going to have a sell-off in the emerging economies currency when the DXY rises. Again, that's what we were talking about earlier, where the emerging economies are most affected by, for example, dollar deflation, and why it's such a big deal for them. But, again, you can look at that kind of correlation there. You can kind of see that that those pairs, the USD side of those pairs moves in tandem with the DXY most often. So you can look at that as well. Let me see here. Let me catch up here. What do we got here real quick? Natural gas, guys. If you guys have been watching natural gas, you saw this huge drop this week. Even did worse than I thought it was going to do. But that was the result of a supply glut. A rise in inventories, basically. But as you can see here, took this strong dive off here. Now, it's possible this is still a wave 4. You can see it right here. It hit right here where wave 1 ended. So, it's a deep wave 4. It definitely goes back more than 50% of wave 3. But it's still a valid wave 4 because it didn't violate wave 1. But, we've got this bounce, but I don't see a lot of impulsiveness coming out of this yet. So I'm concerned that we may be seeing it going further here. And this is what I was telling Discord. I said, our members in Discord, and I said, if we're going to get further downside to this, I'm going to start looking at this potentially as being 5 waves up rather than 3. And then the move down, I'm not convinced yet that the bottom was over here. This is another one of those ones, kind of like with oil. I'm not convinced that this was wave, let me see here. Yeah, wave 3 here. Or no, I'm not convinced that this was wave 5 right here. And this is a 1, 2. I'm still potentially looking at this as a 3 with an expanded flat kind of a thing going on. Though it's pretty deep for that, so I don't know, maybe not. But it hasn't violated, wave 1 way up here. So it could still be a wave 4 playing out. And a wave 5 lower. My original target for the last, I don't remember, what it was at Discord. It was like, I guess probably the last 2 years or so. Has been just under $1, probably like 80 cents, somewhere around there. And as you can see, we got down here to about $1.40, $1.43 or so before we got that bounce. So, I mean, not too bad, a projection a couple of years out, but I'm still watching to see what goes on here. If we continue down here, we lose this HVN here, I think that really kind of adds up a lot to the possibility that this is 4 here, and this is 5 coming down. I think that really kind of opens that possibility up quite a lot. And again, gets you way down here. So we'll see what happens with it either way, but definitely a large drop-off this week here, coming down, taking some people by surprise. Anything's possible, so I guess it didn't surprise me like that, but yeah, I'm like, wow, that is a pretty good move down. We do have this gap here that hasn't been filled here, and like right around the just below the 78.6 here. And from this whole move up, here, it's actually, let me see here. As you can see, it's right here at the 70.5 retracement. Again, my 70.5, I love that. Is it possible maybe we've got a 1, 2, 3, 4, 5 maybe, and an ABC? 1, 2, 3, 4, 5. I think it's probably at least what we have. I mean, I'm really leaning, the depth of this decline really has me leaning toward this being 5 and done here. And minimally, that's a 1, and this is a 2 on a pullback toward that 70.5 to fill in that gap. And that 70.5 happens right here, just above this high volume node here. This is kind of the count we're looking at here. We'll see how it plays out here. You can see the rejection at that. See the rejection here at this high volume node, this big high volume node here. Historically, a very strong level where the market's really interested. So the sell-off from that isn't surprising. Remember what I tell you guys, when you sit right under a high volume node, it works as supply pressure. If you're on top of it, bouncing off it, it works as demand pressure. So not really all that surprised you get, dropped off of there. But it does bring up the possibility that we could be, again, more like this kind of 1, 2, let me see here. That's 1, 2, 3, 4, 5 with 3. So it's 1, 2, 3, 4 potentially here. Didn't even violate wave 1 here. And still have that 5 coming down. So that's what I'm looking at, bigger term, longer term on that. But it depends. Do we get below this 70.5 kind of area here, really start pushing down? So definitely still open to that there as well. Let's see. What would be my interpretation if both the DXY and the S&P would go down together over a longer time frame, days, not minutes? I don't know. I'd have to think about that. That'd be really odd. Because, the idea that the dollar, lessens in value, but assets are also lessening in value. There's a deeper issue in the economy there with that, if that's what's going on. To have them both, decreasing like that. Silver here. Silver doing silver things. Continues its, its consolidation here. Maybe you can get an ABC, 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 ABC. So maybe you can get an A, B, C, D. This would have to be an E here. So if you think this is a triangle, which potentially, I guess it could potentially be, if you have a decline below this swing low right here, this $26.40.5 area, if you decline below that, that triangle is no longer valid because it cannot decline below where the end of the triangle is. Now, your only other suggestion may be that this is an A and this is a B and then you've got a C. So E is not finished here. It's going to come down a little bit lower. If that's the case and you still really want to hold on to the idea that this is a triangle and it's going to go up, watch this swing low here because this is the A, B, C swing low here. So if you decline below this swing low at $25.98.5, again, it invalidates the idea that this is a E wave still playing out there. E cannot terminate below C. Right now my count is what it is, a 1, 2, 1 expanded flat is a 2. 1, 2, 3, 4, 5 maybe. Maybe C up here, A, B, C. And then we'll look for further down. If that's the case, we're looking for a wave 3 down here around just about $23, just under $23 for wave 3, if that's the case there. Let me see here. I'm going to catch you up here. Let's see, gold. Since we're looking at precious metals. And by the way, guys, if you haven't seen yet, let me zoom out here a bit. Just so you know, this is my my longer term silver count. Again, has this potentially finishing up as a B up here and then a C down here toward maybe as low as $5.50 or so. So that's below that 8. You know, that's my bigger picture. That's where I'm kind of looking at long term. And so I say that because we're about to look at gold. And for those of you that knew, maybe don't know what I'm looking at for gold. Everybody thinks things are impossible until they actually happen. Then they're like, what? I think gold's probably got a better triangle forming if it's going to have one. So I've got it alternate here in green. So A, B, C, D, E. But again, if you get a decline below this swing low here, this 1911 and 70 cents, it invalidates this triangle, and we're watching that white count. It might just be a series of 1-2s. 1, 2, 1, 2, 1, 2. And if that's the case, you're going to expect to have a big, strong 3 coming down. Now, if we look at my overall count here with... God, let me move some of this stuff to the other time frames there real quick. What I'm looking at overall, you know, again, my big sub 900 count for gold. I'll get over here. There we go. Then this is going to be something to watch here. Oh, God, dog it. Sorry, guys. Didn't have this all set on the right time frames there. But yeah, let's say the white count's correct and it's coming down because this is the top, right? So my overall count, let me kind of zoom out here a bit more. Yeah, there we go. We can look at it like this. And let me go ahead and just get this out here for right now. Okay, some of these things here, we're looking at different time frames. I keep forgetting they're on other time frames and not on some, and just becomes a pain in the rear end. So anyway, the idea of what's going on here is that this is an expanded flat. So you've got a WXY for an A, and then you have this WXYXZ for a B, and then you would have 5 waves down, or 5 waves down here for your C. And that would take you then down here to around that kind of 860, 880, 900 kind of level maybe. And that just gives you, again, an expanded flat here. It doesn't have to be. It may or may not be, guys. You know, I can't guarantee you that it is or it isn't or otherwise. But if I'm looking at this, you know, that's what I kind of look at here. This coming down as an A, this coming up as a B, and this coming down as a C. Now, you know, jumping out here to the weekly. You know, you've got this large bearish divergence here on the weekly from back in over a year ago, leading up to just 2 months ago, the end of July. So, you know, basically from this whole part up here, big bearish divergence. You've got obviously room to fall here on Stochc RSI going down there. You can see the strong drop off in volume right here. Other than the spike of volume that came right here. Now, you know, again, could be a triangle here. It is possible. If this is a triangle, all that means is you've got a little bit further move up, just probably around this R4 pivot right here around the 2120, 2140 area. You're not going to have some long extended move up because a triangle happens next to the last move. That means the last move, the next move after it is the last move. It's the final move of that structure. So even if it is a triangle here and pops up there, that's all you get is a little bit further up. Before then you have to have a nice large, you know, retracement on that. And that large retracement should be getting you down here at least around 1300. If this is a 1, you know, if this is a 1 here, that would look at getting you down there. Now, maybe it continues to push up higher, maybe it does. You know, we'll cross that bridge when we come to it. But until it does that sort of thing and starts invalidating the idea of this being an expanded flat here, we still watch that. Again, coming into the monthly there, monthly, we're still sitting right up here around topped out, Stochh RSI. RSI is still extremely high up there. Historically, when has gold been this high? Let's see here. Right here before a large drop and then another move up. So again, maybe we get maybe we do something similar. We get a deep move here and then a move up. But either way, it screams that we've got this move down first, which you should kind of expect anyway because this is almost straight up, right? So should expect some kind of pullback on that. Other than that, where else did we have that large move? We had it right here at the top up here. And it went down. And then, of course, like I said, here before it had a strong drop and then move up. Now, in here, obviously, that drop hit this previous structure here and bounced off that. So, similarly, again, should be looking for that drawback down toward this structure here, get that bounce out. So either way, I don't see a lot of argument for a move from here to, 2,500, 3,000, 4,000, 8,000, like people are saying. I think minimally you're going to have some sort of decent pullback. From the high up here of almost 2,100 down to 1,300, that's a significant decline, right? So, kind of looking at that to kind of play out there with everything as it does. But yeah, so with this chart alone, I mean, it looks like a 1, 2, 3, 4, 5. But I don't know. My biggest thing is when I look in this area right here. When you look at that area. Oh, by the way, as Wyckoff here, this would be your structure here. Your reaccumulation structure here before going up. That's how we'd look at it with that. But my big thing is this area right here, which looks more like a triangle as I've got it here than anything else. And if it is a triangle here, it can't be a wave 2. So you couldn't do 1, 2, and then up. It's got to be a 4 or a wave B or a wave X. In this case, of course, we've got it as a wave X here. Wave W up, wave X right here. And of course, Y, X, Z, which completes B there. So, that's why I'm looking at that, guys. Don't be offended if you think gold has to go to 4,000 tomorrow or something. Actually, you should be offended at yourself for thinking that. It's not going to go up that quick. Speaking of which, I saw a silly post about Bitcoin, guys. And it's being shared by some prominent accounts. I don't remember who the account was, but they said, man, Bitcoin could literally go up to $20,000 overnight sometime this year. Bitcoin is not going up. From right now, it's not going up, $10,000, $12,000 overnight, guys. It is not. Can I guarantee it? No, I can't. Can I be realistic? Yeah, I can. But that kind of stuff, again, when we talk about market bottoms and market tops, that kind of euphoric talk doesn't usually find itself at market bottoms. Again, market bottoms where people have kind of written it off and forgotten about it. Price moves up quietly. Market tops are where they're noisy and everybody's done the ridiculous predictions like that and ridiculous comments like that. So I just want you guys to be careful out there if you're seeing that kind of thing off that. -3, good to see you. Thoughts on silver, Mike? You saw that, I believe. Let me see here. Let me see. Let me catch up with you guys here. Wait, I think it just about does it there. Yeah, I think so, actually. Getting pretty good on time there, too. So that works out real well. Did I go out on Bitcoin here? No, did I do it here? Yeah, look at that drop. Oil starting to drop off on that. It's expected. It's what we're kind of looking for. What What in the heck happened? Oh, no, there it is. There it is. Again, Bitcoin's doing its Bitcoin thing here right now. It's finding support or it's attempting to find support off here. But again, looking for that just kind of drop on through. Get the other little power on that drop through is what we're looking for. Guys, please understand that nothing I say here means I'm bearish. Nothing here says that I want Bitcoin to die or I think it's stupid or it needs to die or anything like that. I'm actually really bullish on Bitcoin overall. I'm just looking at current market data and what's going on. And so the response I most often get from new traders is, oh, but on-chain metrics say this. Well, on-chain metrics just say what's going on at the moment. They can't extrapolate based on what may be potentially going on. So your on-chain metrics aren't going to say, well, yeah, we're doing this right now, but if the DXY rises, then this is probably going to have this effect, So be careful with that. Yes, things seem kind of bullish with the with a lot of the on-chain metrics. Yes, they do. Which is why I can't sit here and go, oh, yeah, it's definitely going to go down. I'm going to go down to 2,000. And historically, when some of these things have happened, it's meant that Bitcoin goes up. Sure. But again, the bigger picture is those things have historically happened on smaller corrections, which means potential interior corrections on a larger wave. Again, if what we're doing here since 2017 is a large wave 2, then we're not going to expect it to act exactly like what happened in 2011, 2012, what happened in 2014 and 15. We can't expect that same thing because those were correcting shorter terms. If this is a larger wave 2, because that all was one large wave 1 that had those little corrections in it, then you have to, again, like what we talked about with the stock market and why I would expect it to be a larger hit than what happened in 2008 if we're doing what I think we're doing. It's the same idea. You're correcting a larger time frame. If this is the large wave 2, then you're correcting all the speculation, the big bit of speculation and whatnot that happened over the last 10 years since Bitcoin's been around. And this is the first major correction of that. So, the on-chain metrics can say what they're going to say, and they may be proven to be not correct this time around as far as what your expectations would be based on previous activity. So hopefully that makes sense, guys. Again, I don't want you guys thinking that just because on-chain metrics say something today, that it means it can't say something different tomorrow. On-chain metrics can only tell you what has happened up to that point. It cannot extrapolate into the future what may happen. It just says, as of this point, this is where we're at with our readings. But, again, too many new traders take that to mean that Bitcoin definitely has to do something. And that's perpetuated by a lot of the larger accounts doing the same thing. So, and the sad thing is most of your larger accounts out there have absolutely no economics background at all. Macroeconomics or otherwise. They don't understand things like QE and inflation, and which who really understands that? I don't know. I could be wrong on that. Lord knows the Fed's been wrong for 10 years. They admit it for 20 years. Well, everything they thought about, inflation and unemployment, everything completely wrong. That's what Powell said. And then he went on to pretty much try and blame it on Greenspan, because that's when they started doing the things they've been kind of doing here the last 20 years. But nonetheless, macroeconomics is a difficult thing. A lot of moving parts, guys. So I try to, when I look at things, something I've learned is, the simpler you can make something, the more likely you can find truth in it. And so, instead of looking at all these other little bits and pieces, moving parts, just step out and take a bigger look at what may be going on. And so that's how we get back to the, the social mood and, what may be going on with all that. Excuse me. Let me see here. Let's see here. Zet, have a great day, bud. Let me see here. Casper says up there in the Arctic where they can last a few months. Maybe. Let me see here real quick. You were looking at I'm Deuce. I think it said that right? It says, according to Elliott Wave theory, wave 2s can correct 50 to 85.4%. Yeah. 3,200 was 85% of 20K roughly. Yeah. Potentially. I haven't said it's not, but again, the big thing about what's going on with that is, let me see if I can find my other chart here. My larger term chart here, longer term. Let's see, here we go. Again, the idea that this right here would be correcting the excess speculation in this, whereas this was only correcting the excess speculation here, this was only correcting the excess speculation here. That creates wave 1. As a wave 2, then it corrects all this here. And that's why this would, take longer and potentially, the on-chain metrics might not give the same action that they do here. I'm not saying it won't. I'm just saying if we look at this as a 1 and this is a 2, then we shouldn't expect the exact same thing happening here that happened here or here. Okay? Because again, it's a larger, this is 10 years here that you're correcting all that excess speculation. And what Mises would have termed malinvestment. Again, these were only shorter term here. Corrections off those. This is for the whole thing. But, again, yeah, could definitely be a wave 2. If it's a wave 2, it's an ABC, right? If it's an ABC, that makes it possible that it could be a W. We could have an X as a triangle here. We could have an X up here. And then we can have a Y as an A, a B, and a C for a Y. Or again, a W here, and then an A, B, C, D, E as an X triangle. And then a Y, A, B, C down for a Y. So yeah, just because we get that 85.4 correction on there as a possible wave 2 doesn't mean it can't be a wave W, for instance, on that. So yeah. Let me see here. You think that the log chart distorts the corrective power? Not sure I'm understanding what you mean there. In order for it to visually seem like a more powerful wave 2, it would have to correct to 95%. Not sure what you're meaning there. Sorry. I'm not always right on top of everything, guys. Sometimes it takes me a little bit and I don't catch it right off, so I do apologize for that. Clark, man, have a great day, buddy. Ben Huevos, what's up, man? You said you mentioned the USD Mexican peso. Would you take a look at the chart really quick? Sure. Hey, I agree, buddy. Clarkman says, have a nice weekend. Don't forget to turn off those charts and keep yourself safe. I agree, guys. Let me see here. USD peso. Let's get this loaded up here. Yeah, I have to start my computer. Restart it here soon. Come on. There we go. This is what I'm looking at here. So I'm looking at this nearing a correction of 5 right around this area. And they're looking for a nice large move up here toward the 24.278 kind of area as a wave 2. So this becomes a wave 1. This becomes a wave 2. This should correlate with a DXY bounce here. Now, and this could be a different count coming all into this, but right now this is kind of how I'm looking at it. So what does that mean for the DXY? Well, it means at the least, if this is here and DXY is going to correlate with it as we would expect. At minimum, we should see the DXY moving up for a few months. When we look at this as an emerging economy, that we kind of look at, how it does with the DXY there. So yeah. Amdu says, all good, Chris. Just want you to know I've been watching you for 2 years, and the amount of knowledge you give for free is priceless. So I appreciate that. Thank you, sir. Thank you. Again, my apologies for not really catching on to what you were meaning there. But I've been talking for about 2 hours here, and my brain's been going on. And I was up late last night doing these hot takes for Tier 3. So I got about 3 hours of sleep last night. So I'm sure it's me. It's all me and nothing about you there. By the way, guys, notice on your MACD here, you've got this bullish divergence with the with what's going on with the price here as well. You've got that same, just a bit. It's more slight bullish divergence here on RSI. You know, we're right at the S2 pivot on the daily here, so it's a good possibility. You know, that we're at the bottom here. If it's gonna come a little bit lower here, I'd expect it to probably test this descending channel EQ. You know, right there. But it could very well bounce right here and head off. Really what you want to see for confirmation that this bottom is in is you want to see this previous significant high here, this swing here. You want to see price advance above that. The other way I look at it, of course, is this channel here, and a breakout of this channel should suggest that it's heading up there. You know, target of 2.78335 on that point of breakout on that. So that's where I'm kind of looking at on that. I think this is I'm feeling like this is probably the bottom here. If I actually measure this out here, that finds us, you know, bouncing right there at the 70, right there at the 65, almost to the 70 and a half. I don't have it exactly on there. But again, you know, I'm a big fan of the 65, big fan of the 70 and a half. So definitely, you know, looking sharp on that anyway, as far as it would be for a move up there. So, but if this does move up, we should expect the DXY to move up with it as well. So, you know, these are the different ways that, you know, you look at the DXY and you go, man, it looks weak and it looks this and that. Well, if this is correct here, then we should expect to see the DXY rise as the dollar itself rises against, you know, Mexican peso. So, Hank, have a great weekend, man. Casper, you too, buddy. So there we go. That's what we're kind of looking at there. Hopefully it helps you out there, Ben Huevos. You know, again, confirmation would be, first of all, an advance through this descending resistance. Secondary, if you want a little bit more confirmation, a break up above this swing high here. What is that? Right there around 21.94190. So if you can get above that, it should kind of say, hey, you're heading up there then. So I think that'll do it, guys. Let me see here. Yeah, I mean, you know, again, looking at this, it's just continuing to look weak on that. Let me pull back to our regular chart over here. Yeah, watch for your breakdown of this support here. That's probably a good sign it's headed down. But really what you're looking at is this swing low right here and this swing low right here. Your diagonals are fine to look at, but what you really need to see is a breakdown through those horizontal swings right there. All right, guys? So that's it, man. I appreciate you guys. Hey, Phoenix, request that in the chart request channel in Discord. Ask me BSV USDT or BSV BTC. Just put a request in there, and I'll get that done today, buddy. Yeah, definitely. Lewis, thank you so much for showing up. Spiral Architect, you're welcome. Ben Huevos, you too. Everybody, thank you so much for joining in. As always, don't forget, beginning next week, I'll only be live publicly here on Mondays, Wednesdays, and Fridays, all right? So don't forget that. Jump on in there. Be sure you're joining us. And as always, guys, I can't say it enough. We would absolutely love, I hang out with you guys all the time here. We'd love to have you in with what we're doing here at howtotradetowin.com. So get on over there, join us, and chat with everybody all day long. Find lots of trading opportunities. But better than that, man, it's all about just the dang education we got, man. So much of it, all right? You guys have a great day. Have a great weekend. Thanks so much for being a part of what we do here live and, of course, over in Discord for those of you in over there as well. But don't forget, guys, no matter how good or how bad something looks in the charts, there are never any guarantees. So it's all about risk management. Don't let anybody tell you anything otherwise. Because if you start to believe the other nonsense, you're going to lose money consistently, all right? Y'all have a great weekend. Take care, and we'll see you Monday. Or if you're in Discord, I'll see you over there in a bit. Take care.